So let's take the discussion forward on markets with Amnish Aggarwal joining us now. He's just come out with a new note on India strategy, basically making a hypothesis for the markets going forward, Nifty and rest of the market, and what are the triggers which lie ahead for corporate India on the earnings front. Amnish, afternoon. Thank you so much for your time. Uh, let's lay down the environment right now. On the one side, there were macro worries. On the other side, there are domestic triggers like festive season. Traditionally, we see consumption boost coming in over here, a mini stimulus of sorts. And then there are markets where the large cap universe has not done a whole lot, but mid caps have already run a lot. So how are you advising your clients and institutions to approach the market right now?
You see, markets, I would say, are very delicately poised. And as you elucidated, there are a few, you can say, factors. For example, we are on the cusp of a festive season, and usually festive season determines the trend in the coming 3 to 6 months. Because if the festive demand is good, and the probability of which has slightly increased given that the yesterday's inflation numbers were good, so that actually determines how the second half of the year will go. And second half of the year is usually very important from the viewpoint of the overall economy, because second half, you can say, it is more like your 40-60. The second half of the year is actually much bigger. So that is, I would say, uh, one part of it. Secondly, the capex momentum, I would say, particularly from the government side in the first half, has been practically good. Maybe because this year is just on the verge of we are approaching election year, so there might have been some preponement of capex which has happened. And thirdly, your Indian economy as such, if you look at the global scene, it is doing very well. But having said that, I would say the things are slightly mixed, because from the last month or so, we are witnessing FI inflows, and there could be, you can say, some sort of what I am looking at is some sort of a clear demarcation whereby all the premium goods, luxury goods, they are doing very well, but the, you can say, the very small ticket items are under pressure, maybe because of higher inflation, the demand from the rural India, as well as from the bottom end of the pyramid that doesn't seem to be that robust at this point of time.
Right, Mr. Agarwal, this is Vinny joining in the conversation as well. Obviously there are a lot of factors that you spoke about right now as well. But when you look at like the election year, capex side, so is that something that you would be looking more at in terms of a sector, or something that you would look at right now would be the infra side or the capital goods side? Is that something that would excite you right now?
You see, if you look at, say, the infra or the, you can say, capital goods and engineering side, so this is one segment we have been very positive from the last couple of years, and it has played out very well. Now, where we are standing today is in a sector which has rallied massively over the past couple of years. Many stocks in these, they have actually given you multi-bagger returns. Incrementally, in some of the segments here which are related to, say, broader economy, your energy transition, smart cities, your hydrogen and all, I think all these segments have got a, you can say, steady growth ahead and a long runway. But a lot in the capital goods sector depends upon how the elections also go, because whether, you can say, the capex push is there, railways modernization is concerned, or even the defense. So that has happened in the last 8 to 10 years only. And predominantly it's visible from the last 3-4 years. So I think if we get the continuation of the government, then these sectors will continue to do well. Otherwise, some sort of a reaction in some of the segments which are very sensitive to the government policies here, that can't be ruled out at some point of time.
From the mid-cap side, there are two interesting names which I find mention of in your report, Amnish. One is Navneet and the other is RR Kabel. Let's talk about RR first. Very high quality company, but valuations perhaps not very compelling as one would like it to be. How do you see the triggers for this category, wires and cables? What kind of growth can this category see next 2-3 years?
You see, wire and cables, if you look at long term, the category has been growing, say, close to double digits. But if you look at, say, past 4 to 6 quarters, it's not only, say, RR Cable, but all the companies, whether it is, you can say, Polycab, Havells, KEI, so all the companies have been doing very well. Now, if you look at the uptick which is happening on the industrial side, or what is happening on the residential real estate side, I think the demand for both wires and cables continues to be robust. Now coming more towards the RR cable side, cable has got the maximum contribution coming from B2C, that is the wires which go in the homes relative to all the other companies which are listed in this space. The distribution is strong and so is the brand name. And so we believe that RR cable will continue to do well, and there is a scope, significant scope exists in RR cable for expansion of margins also and highly profitable growth in the coming few years. Although, yes, it is not a cheap stock, the valuations are at a premium, but if you compare with some of the other wire and cables companies, I think it is on par or even at a discount to some of the other players. So, this particular factor will continue to play in the favor of the company over the, say, next year, year and a half at least.
Right, and the other stock that Ajay was also talking about is Navneet Education. What's the view on this one as well? This one has been in focus in the last couple of months as well. Anything specific that you're finding here that it's making to your list for this?
Okay, see, Navneet Education also, I think we have been positive from quite some time. I think there are some near-term triggers in the stock. One being that the NEP syllabus change which has happened, so that will benefit the publishing business of the company. So that is one. The second big is that the entire stationery space has been very stagnant from quite some time and had not seen the entry of many players. Now we are looking at, say, some of the new companies listing in this space, and the kind of which actually makes Navneet a very interesting company to look at, because this company has got a good track record. It has delivered in the past, and usually when the new companies enter into the space, then the incumbent who is actually trading at a very attractive valuations tend to gain. So I think that makes Navneet a good player in the near term also and over the medium term also.
Right, Amnish, thank you so much for joining in with us this afternoon on ET Now, giving us an understanding on what's looking exciting in the market and how the market is actually set to shape up as well. Thank you so much, Amnish, for joining in.